So next up is actually not a panel. It's a fireside chat.
Nice.
Amen. And it's brought to you by Development Bank of Jamaica. We have John Koetsier.
Koetsier.
Did I say that correct? John?
Where's John? I know what John looks like. John was our moderator with Richie. Where's John? Did we lose our moderator? I hope we didn't lose him to the World Cup.
Well, there you have it. Is Marcus Dantus here from Shark Tank? So let's just sit down and do the fireside chat. Come on, me and you. Let's talk about some things.
Okay, there we go. All right.
Who that? Which one? That looks like Marcus, right? Is that you?
All right, thank you so very much. Put your hands together, ladies and gentlemen, representing Shark Tank,
Marlon
Mexico.
Nichols, founding manager of MAC Venture Capital.
Oh, there's John. And there we have
Is that John on the phone?
Our moderator.
He's closing the deal. You just invested in something that grew. Is that right? That's the theme, investing for growth? Yes, sir. Just say yes.
Thank you so very much. Thank you.
All right, boss.
Have a seat, gentlemen, and we'll begin our fireside chat. Now, this will be the fireside chat between you and lunch. No pressure at all.
There you go.
I'm going to invite you to sit down and just give our moderator. Welcome, guys. Thank you. Beautiful shirt.
Don't set it up.
Hey, guys, how's it going?
Hey.
Am I in the right spot? This is very, very important. Cool. Marlon, I saw you earlier. You were on stage earlier, correct?
I was not.
You were not?
Oh,
shoot.
10 minutes ago.
Introduce yourself, please.
What do you want me to say?
Who are you? What do you do? What is special? And what are you going to bring to this audience that is freaking amazing?
All right, everybody. Hey, my name is Marlon Nichols. I am the co-founder and managing partner of a seed stage venture capital firm based in Los Angeles. We invest primarily in North America, but also do some in Africa and LATAM. We manage close to just shy of $500 million in assets. And I am Jamaican born and happy to be back here. Yeah.
Wonderful, wonderful, awesome. Marcus, tell us a little bit about yourself.
Not Jamaican born. I apologize. I'm from Mexico. I'm an entrepreneur. I'm an angel investor. I've been an angel investor for about 20 years. I manage a couple of seed funds, and the last 7 seasons of Shark Tank Mexico have been one of the sharks. So hope I can give you some pointers about investing in Latin America.
Wonderful. Marcus, we got to hear from that a little bit. What's that experience been like?
You mean Shark Tank?
Yes.
Well, it's been very interesting. You become a public persona, which I wasn't planning on it.
Tough luck.
Yeah, no, it has its perks. It also doesn't. Like, you're on a beach hangover and somebody wants to take a picture with you. But it's been very interesting. There's 2 types of startups. There's, the startups from 2 guys that go to an Ivy League school and create a startup, and when they have the idea and they create the company, it's already worth $8 million, even before they have a product. And then there are the startups that actually come out with a product or a service and are invoicing, and they're not worth that much because they don't know the startup game. Usually those are the ones that we get in Shark Tank. And it's a lot of fun because you can actually really help them, become a startup, grow their company, grow their valuation, and maybe get some money in.
Marlon, talk a little bit about the process of investing for growth. How's that changed over the last, let's just say 3 years, COVID time and all that stuff?
Sure. So I think the last 2 years were kind of like the heyday of venture capital. There was a lot of money being thrown at startups, a lot of money being thrown at venture firms. And the spending just got a bit crazy. There was a lot less due diligence being done. Deals were getting done at a kind of a rapid pace, and companies were getting valued well above where they should have been valued based on true metrics. Valuations were being, I guess, set based on competition. I want to get in this deal, you want to get in this deal, so we're just bidding each other up for no good reason. And I think what we're seeing now, given that we're close to a recession, or at least we have a significant economic downturn, is that things are coming back down to normal, right? And it starts with on the venture side. So it used to be that in the last couple of years that if I deployed all the capital that my LPs entrusted with me in a year, I can go back to them, next year and say, hey, I need more money, and they'll just re-up, right? Well, now, because public markets and private markets are not doing so well, they tightened up their belts, and so now they're looking at more like a 2.5, 3 year refresh cycle, right? And no venture capitalist wants to be out of money at any given point, right? If we can't invest, then we're no use to founders. And so that's now translating to less deals getting done at lesser amounts, et cetera. So it's just a lot of belt tightening that's going on right now.
Talk about what that does for an entrepreneur. It's funny because Marcus was saying earlier, giving out a lot of money. What are founders like? How are they doing? I know one founder who pre-product, pre-company, raised $10 million about 18 months ago, right? Now, he's got a history, co-founders have a history, all that stuff. But it seems often that when you raise a lot, you spend a lot. How's it changing behavior of founders now? And have you ever seen the smart founder that raised a ton when it was easy and then didn't just burn it all?
Yes. So we actually have a company in our portfolio. When we invested in 2019, the company was valued at $13 million. By the end of 2021, middle of 2021, it was valued at $2 billion. They raised, so $13 million to $2 billion. They raised somewhere like $400 million during that span. And they only have 150 employees, and they have over 6 years of runway.
No Super Bowl ads, no naming rights to a stadium.
Nope, none of that. None of that. Just running the company and making sure that they can weather any storm that comes their way, and they can buy their way into winning the market. So we've seen it. But the biggest difference, in terms of managing a company now, is what they're spending on, right? So, I'd say over the last 2 years, there's this grow at all costs, right? Doesn't matter. Unit economics gives a fuck. Doesn't matter, right? Now, unit economics do matter, right? So if you can't show positive gross margins or positive contribution margins, you're probably not going to be able to raise money. So now the capital has to go towards things that actually, go with building a solid company.
Marcus, talk a little bit about non-traditional entrepreneurs. You said you're on Shark Tank, you see all kinds. I haven't seen Mexico's Shark Tank. I wouldn't understand it, most of it at least, if I saw it. But I have seen, of course, the one from the States, right? And you see people, it's the soccer mom, the corporate drone, the whatever, that all of a sudden they had an idea, they did something, the recipe the mother handed down, whatever, and they started a business. And how are you seeing entrepreneurship changing and entrepreneurs changing?
Well, of course. I mean, first of all, the culture of entrepreneurship since, Eric Ries came up with the Canvas and the Lean Startup book, I think that went everywhere. And every single university everywhere in the world has a program that teaches entrepreneurial culture. So that changed things. I mean, when I graduated from college, nobody wanted to become an entrepreneur. We all wanted to go to a big company and become like a manager in something. Now, I can assure you that in Latin America and the Caribbean, half of the people that graduate from college want to become entrepreneurs, and that's a huge change. And this change of culture comes with a lot of changes, especially because in the last several years, you've seen a lot of unicorns arise in Latin America, which I personally think is ridiculous, but they have.
Unless they're in your portfolio.
No, no, no.
Then it's perfect.
But you have to understand. No, no, no. That's not it. The problem is that investors have a short memory. This happens every certain number of years. This happened
10
in
years.
2000. This happened in 2008. This happens again now. You start investing a lot of money into these companies. You grow them up to a point that are completely ridiculous valuations. Companies that lose money and now are worth $8 billion. And they're not going to raise more money if the markets go down. And that's exactly what's happening now. So I think there's an adjustment being made, and I agree with you. I mean, now companies have to make money, which is something that you would think is implied. Yes. But because of this, because of all these valuations, because of all these success stories, then the culture of entrepreneurship has grown a lot, and now everybody wants to be an entrepreneur, which I think is good. Just be careful of how.
You learn a lot by failing. I think we've heard that story a couple times. I've learned a lot by failing. I've wasted a lot of VC money. Thank you, guys. But you do learn a lot from that. Marlon, talk a little bit about starting something now. Let's say you're at seed fund stage right now, or you're thinking about raising it. It's really challenging because when there was easy money, you could get a decent amount. You could pay yourself a little salary. You didn't want to pay yourself too much. You didn't want to look bad to the VC or something like that, right? But you could pay yourself something. Now, if you don't have a significant personal runway, is it harder?
So where's the question in there?
How do you start when you don't have the easy money? Because you got to live still, right?
Yeah. So, I mean, mobile technology and the internet has significantly reduced what it would take to start a company, right? Mm-hmm. So, and there's also a lot of like open source coding and stuff like that you can tap into. So I'd argue that it's way easier today and way cheaper to start companies today than it was 10, 20 years ago, right? Mm-hmm. Which makes the valuations and the amount of money that companies are raising at seed stage just feel upside down, right? Because they're actually raising more to do it now, even though it costs less, yep. Right? Yep. So, I think you just have to figure out, what is the value proposition that you're going after, what you're trying to solve, and make sure that you are uniquely qualified and capable of doing that. And you just got to start. You got to get something out there and put it in front of someone like us, and hopefully you'll get a check written.
Marcus, talk about scaling, and so getting your maybe B, but certainly C, D, E rounds. When's the right time for doing that? How do you do that and keep some ownership?
Well, I think it has to do with how the company's actually doing. I mean, there's two ways to grow a company. You can grow it via sales and via your annual sales and annual EBITDA, or you can grow it just by getting money and getting a valuation. If you do just one of them, then you won't grow as fast. Like if you do it just by sales, it'll take you a long time to actually build a company. If you do it just by valuation and by getting money in, then it's basically an empty shell. And eventually, if valuations change or the market changes, then you're in trouble because you won't get another round, a bigger round. You will have to get a down round, and that's a really bad thing for founders. So I think you have to be very careful, and with every money that you get, bring the company up to par to what that money, grow it and get to another stage before you raise the next amount of money. The problem is that founders are raising money really quickly, or were raising money really quickly. I know this company in Mexico, it was a scooter company. They raised $7 million. Bought 100 scooters, then raised $22 million, then bought 1,000 scooters, then raised $45 million, and then raised $150 million. And it all went bankrupt in 12 months, 13 months. So
that's failing fast, really fast.
It's very fast. So nobody knows where the money went. It didn't go to buy
FTX.
Scooters. So that's the kind of thing that I think you have to be careful. If you don't bring the company up to pace with the money that you're getting in, if the company doesn't sell what you're supposed to be selling in the next stage, then again, you're going to lose it eventually.
Marlon, similar question. You see an entrepreneur, you've invested in them, they've scaled. You've kept some dry powder, you've kept some cash here. You want to help them continue to scale with their next round, but you know they need some help, they need some training, and you prefer that to not come at the cost of $5 million of your investment. How do you do that? How do you come alongside an entrepreneur, a CEO, who's raising their second, third, fourth round of institutional capital and give them the strategies they need to be successful with that?
Yeah, by then it's probably too late if they've raised all that money, because we participate at the seed stage, right? So you build a product, you're about to take it to market, or you've recently taken it to market, right? And we're pretty active and involved with our founders at that stage, right? So I sit on probably 20 different boards right now. It's a lot. And our team is super supportive of those founders. So we just kind of wrap around them, right after we make that initial investment, and we come up with the plan together. And even back up before that, right? The really strong entrepreneurs, when they're going out for funding, they know exactly what they're going to raise money for, right? And I think there are only two reasons why you go and you raise venture capital dollars. One, you need to build something, right? Like we have a company that's doing fully reusable rockets, right? Like they need money to build that
Seed stage
shit.
funding on fully reusable rockets?
Yeah.
Are you serious?
Yeah, it's close to market too, coming to market. But like they have to build something, right? You need actual dollars to build that thing, right? And then the other thing is you have to scale, and you have to scale quickly, right? Because any company can just take their time and get one customer, another customer, et cetera. But sometimes you have to spend to own that market, right? So those are the only two reasons that you should be raising venture dollars, because it's expensive. It's dilutive, right? As an entrepreneur, you should want to own as much of your company as you possibly can. Venture capital kind of takes that away from you, right? So yeah, so own as much as you can, and know what your key milestones are, and that way we can work towards achieving them.
So when your entrepreneurs, your investments, they graduate into further levels of investment, what's your involvement look like as they continue on?
So it depends. The company I mentioned earlier that became a growth stage company in basically three years, right? I've known those founders for a long time. We have a really deep and trusting relationship. So while I'm no longer participating on the board of that company because it doesn't make sense, it's not a good use of my time, and they're not going to get the value that they need from it. Whenever a major decision is coming about, they're going to call me, and we're going to talk about it. I'm going to give them my perspective. So ideally what happens is, as the companies graduate, seed, I'm there as a board member or a key advisor. Series A, I'm still there. Series B, now you have a couple other board members involved that are used to working with growth stage companies. I'll likely step off the board, maybe observe, if that, but stay involved with the companies because, we're invested for, 5, 10 years.
Marcus, talk to us about verticals a little bit. We heard quite a bit this morning about fintech. We heard quite a little bit about ed tech and other stuff like that. It must be interesting being on Shark Tank because they give you everything, right? I mean, there's got to be entertainment value as well as investment opportunity. And maybe sometimes they cheat a little bit because this will be super entertaining and there's not much investment value. What are the verticals you're excited about in the next 3 years?
Well, I'm assuming you're talking as an angel investor.
Angel, whichever.
Yeah, I mean, look, again, fintech in Latin America is huge because people are unbanked, and whoever banks them is going to make a lot of money, especially after the pandemic. EdTech, of course, is big. Logistics, anything that has to do, well, think about it. I mean, if you're buying all this e-commerce is growing, logistics are growing, mobility is growing a lot, especially in conflicted cities like Mexico City. Traffic is impossible. You have anything that has to do with artificial intelligence and machine learning and IoT, and basically, in Latin America and probably the Caribbean as well, you don't have that much data. Yep. So now we are entering a world of data where you can actually predict people's behavior, like Netflix does or like Amazon does, but now everybody can do it. So these types of companies are also gaining a lot of strength. And then you have the three obvious ones. I think that social impact, after the pandemic is growing a lot. I think that taking care of the environment, ecology, anything that has to do with health, mental health, especially mental health. We are very stressed after the pandemic. And so those are the areas that I think that the markets are excited about. To be honest with you, I'm very agnostic. I get excited about founders, not about specific markets.
Super interesting. Marlon, same question for you. Verticals that you're excited about right now?
Yeah. So we too are industry sector agnostic, right? So we've done B2B software. We've done, as I mentioned, reusable rockets, right? And there's a lot of stuff in between that. Consumer as well. Right now, we're stage specific though. So seed stage is our sweet spot. So you've built a product and you've either recently taken it to market or you're about to take it to market. That's the right time to talk to us. I'm excited about geos, right? So over the last couple years, I've done personally 8 investments in both East and West Africa-based companies, right? I think there's a huge opportunity there, and I've done a couple in Mexico City so far, and I just think there's arbitrage there, and so we're going after that. In terms of to directly answer your question, I love marketplaces. So I like marketplaces. You have customer buyer on the other side, but there's something in the middle that's very sticky, whether that be specific defensible technology or just value and know-how. And so we've done marketplaces in digital health. We've done marketplaces in kind of financial instruments and prop tech, et cetera. So really interested in that. But what gets me going is like this is a big ass problem, right? And nobody else has figured out how to solve it yet. And we think that this team has figured that out. That's what I want to go after, because I'm about building like really big, like massive companies.
Marcus, talk a little bit about what the companies in your investment area of focus geographically might be able to do better than anyone else. I mean, if you look at it globally, you see European startups, they're generally pretty good at being multicultural, multilinguist, right? Because they have to deal with many different small, not isolated, but smaller markets. If you look at American tech companies, quite often they're very good at scale because they can scale up significantly quickly. What do you think startups in your region, maybe this as well, might be best in the world at?
Well, Mexico is specifically interesting because it's the door. It's really a very good country to start, moving to Latin America if you're a company from outside of Latin America. And most Latin American companies want to go to Mexico in order to scale to the US or even to Europe. So we're like a revolving door for both. It's very low cost to hire people. So companies can survive with very little money for a while. There's not that much competition in startups. And you don't have to, the arbitrage part is true. I mean, you invest a lot less in a company that's starting in Mexico, and then you take it to the US and it's worth 10x, even at the same stage. So that's very interesting. So I think there's a lot of talent, and it's easier to build a company, it's cheaper. The problem is also there's a lot less ambition. The entrepreneurs are not as ambitious as they are elsewhere. So
The horizon set lower?
yes, without a doubt.
Marlon, talk about, I'm fascinated by your investments in Africa. That's been a tiny focus for traditional venture capital, probably not even on their radar. Probably if it is on your radar, more challenging in some ways, shapes, or form. What can they do better than anyone else in the world?
Well, it's one of the youngest it is the youngest population in the world, right? So I think the average age across the continent is 18. It's mobile forward. So I talked about earlier the world getting smaller. and it being cheaper to start things, right? So they're mobile. The last panel was about mobile payments and infrastructure, right? M-Pesa, for instance, is the first kind of mobile money company in the world. It's an amazing racket. Like, think about putting money into a system and that money never leaves the system. And the owners of that system get interest and fees off of all the money that never leaves, right? Anyway, they have these kind of things set up. They're very early adopters of technologies and new things, and they're super sticky, right? So all those things put together make for an incredible market for new technology and new companies, right? So there's that, and then I think if we go back and look at like where Jamaicans come from, like most of us are Nigerian, like by nature, right? And so if you meet Jamaicans, there's a very like eager and like hustler mentality, right? Like we're gonna go get it, and that's the same like characteristics I see in the founders in Nigeria, right? And so I love all those things about it, but then they also have like some real challenges, big challenges, right? So homelessness is a problem all over the world, right? But the way that they do rent there contributes to homelessness. I don't know if you all know this, but imagine you want to go rent an apartment, and you got to come up with 12 months to 24 months of rent up front before you can step foot in that apartment. Like, that's a real problem, right?
Wow.
Yeah, there were times in my life, there's no way I'd come up with 12 months of rent, right? And so we invested in a prop tech company, for instance, that's allowing the building owners and the landlords to get their money up front and allowing the renters to actually rent month over month. And they manage that process for them. So if you think about how much, how many properties, how many people need to rent, like across that continent, right? That's a massive opportunity. So it's about spending the time to understand the ecosystem, understand the challenges there, and then going and finding founders that are building like real solutions to those big problems. That's what gets us going.
Cool. Question for the two of you. What kind of teams do you look for? I know, for instance, a lot of the companies that have been born during the pandemic are entirely distributed. Richie, who was up here on stage, companies entirely distributed. Are you looking for, does that matter to you? Do you care?
Not at all. I actually encourage it. I think it's very smart. If you have like a sales team in the US and a development team in Mexico, and that way you're getting the best of both worlds. As long as you have a management team that is complementary to each other, like, how many times I've met, these engineers that are coming up with a new product, and you ask them, so what are you? And he says, I'm a mechatronics engineer, and you, mechatronics engineer, and you, mechatronics engineer. And then you say, well, who's going to be the CEO? And they say, well, I'm the C.
We'll vote on everything.
I'm the C, he's the E, he's the O. And you're like...
Get nothing done. Nothing gets done.
Yeah, that's not how it works. So these guys, they have to understand that there has to be a leader, that they have to complement each other, multidisciplinary teams that you like and that like each other. That's kind of what I look for.
Same question.
Yeah, the answer, it depends, right? I mean, if you're building a reusable rocket, everyone needs to be in the same fucking place, right? Because you're not going to be able to do that with a distributed team, right? If you're building an e-commerce company, well, then maybe that's a little bit different. The key, though, is can you build strong company culture, even though folks are distributed, right? If you can figure out how to do that, then have at it. It's about being efficient and productive. So if you can do that with a distributed team, go for it. If you need everyone in the same building, then do that.
A client of mine has a distributed global team, and one of their engineers happens to be in India, and they used to, pre-pandemic, had an office in Bengaluru or something like that, and his grandfather or grandmother was dying, and he needed to take 3-4 months away, and they went to a fully remote strategy. They kept that engineer, kept that talent, and he could do what he needed to do, and so that makes a ton of sense. Maybe we have 2 minutes left, 1 minute for each of you. Your best advice for the entrepreneurs in the crowd for their next ventures, whatever they're doing. Your best advice, Marcus, go.
Super simple. First of all, try to do something that you like. You know, the only thing I can guarantee you is that as an entrepreneur, you're going to find a lot of obstacles in your way. And if you're not loving what you do, it's going to be much harder to surpass them. Second, try to solve a problem or find a necessity and differentiate the way you solve it. I mean, and if you do that and you have a good team, I think success will come.
Excellent. Marlon?
Why this? Why now? Why you? Just answer those questions.
Wow, that was very quick. Awesome. Thank you so much, guys.
All right.